Hello friends, welcome to Learner's Planet. Friends, this is our first session for data interpretation. In most of the entrance examination, data interpretation has almost 20 to 25% of weightage. Definitely it is going to be very important area, right? Before we move further, we just discuss what is data interpretation and why it is required, right? Friends, we come across figures and statistics almost every day, whether we are working in a small company or maybe in a bigger company, you are a student or maybe what, right? So you come across data and statistics every day, right? So studies and manipulation of these data is actually data interpretation. Now there are various ways to organize data. You can see some of the examples over here. We have presented certain data over here. Now data should be organized in a number of ways, so the larger volume of data can be presented in a more compact and precise form. Unorganized and haphazard data doesn't make any sense. Being a manager of a company, or maybe you are having any post, suppose you have to present the data before the top management, so you understand that time is limited with them, right? So you have to present the data in very organized form so they can just interpret it in a smaller amount of time. Maybe it is a daily production figure, maybe sales figure, maybe performance of the staff, maybe productivity, whatever the different things are there to be presented. So organized presentation has to be done. So there are various ways of presenting the data in organized form. We will be taking them one by one, right? Friends, as I have already told you that data interpretation is almost 20 to 25% part in any entrance examination. In most of the entrance examination, maybe if you talk about CAT or Bank P or maybe CSET examination, any examination, it constitutes almost 20 to 25%. So you understand that it is very important. And we will be discussing various methods to solve the problems based on data interpretation. But before that, you should attend the basic sessions because all of this will be playing an important role. So you must be knowing the calculation basics, so you could multiply and divide or maybe add or subtract faster. Percentage, yes, it's very important because I just take an example. You have to find out suppose the rate of increment. Okay, so you need to understand, you need to know the basics of percentage, then averages and means, right, and ratio and proportions. So these are the important topics that you have to refer before coming to the data interpretation sessions. Okay, if you have not attended these sessions, do attend them before coming over in this session, right? Now, as I have told you that there are various ways of presenting data. Here I have shown a data table. Okay, the data is presented in the form of simple table over here. Any type of data can be presented in table form, but it has to be in accurate manner. Okay, but interpreting the data in table form is really difficult and time consuming. So we have other pictorial or graphical presentations also to present the data. Okay, so this is what data table. Next is pie charts. Pie chart is probably the simplest of all pictorial form of data presentation. Here the total quantity is shown in the distributed over one complete circle. Okay, now this is 360 degree. The center angle of the circle is 360 degree. So in pie charts, data is presented with respect to only one parameter. This form essentially presents shares of various elements as proportion, or maybe you can say percentage of the total quantity, right? Each element in the pie chart is represented in terms of quantity or as the angle made by a sector representing the elements. Okay, uh, or we can say it's a proportion of the total or as a percentage of the total. Now here you can see this countries by area. This is a complete circle. We call it as a pie chart. The center angle is 360 degree, this angle. Now here we are given that Russia, Canada, China, United States, Brazil, Australia. And these are the segments which show their contribution or their areas. Like out of the total area, 27.3%, that is this, is covered by Russia. Similarly, 16% of the total area is covered by Canada, 15.4% of the total area is covered by China, 15.4% of the total area is covered by United States, 13.6% of the total area is covered by Brazil, and 12.3% of the total area is covered by Australia. So this is how we have presented the area of different countries in a pie chart, right? Now we can find out this angle also, right? See, out of 127.3%, suppose that is going to Russia. So from 100 it is 27.3. So what angle this will be? That is, we take the part of 360, right? 360 is the complete angle, and this portion is, if it is 27.3 from 100, then what it will be from 360. So we can calculate each and every angle. So from angle we can calculate the percentage, and from percentage we can calculate the angle. Okay. Now in this pie diagram, this datas are given in degrees. So we can convert them to percentage also, right? Now how do we do that? Out of 360 degree, 120 degree is going to bus, right? That means from 360, 120 is going to bus. That means from 100, what it will be? It is 33.33%, right? Similarly, 90 degree is for car. So out of 360, 90 is for car. So out of 100, it will be 25%, right? Similarly, we can calculate for others also. So whatever the question is given to us, we can calculate the answer in a respective manner. Okay, we will be solving problems at that time. You'll be better cleared. As of now, you just keep this thing in mind that the center angle is 360 degree of a pie diagram, or because it's a circle, right? So the data can be converted from degree to percentage and percentage to degree, right? Now next is bar charts. This is a type of graph used mostly to depict data in discrete way. They're quite accurate, and comparison of variables is really very convenient. Here we see one example. In the year 2000, 2001, 2002, 2003, what is the sales of different products, that is P1, P2 and P3, right? So P1 is shown by blue bar. This blue bar is showing the sales of P1. Maroon bar is showing the cells of P2, and this green bar is showing the cells of P3. So we can make a comparison among these products, that which product is being sold the most, right? Here we are given the data's sales data in thousands of units, right? This is 1000, 2000, 3000, 4000, 5000, 6000. So from these three bars, suppose we wish to draw a conclusion that what is the sales of the product P1 in year 2000. So that will be something around 4000 to 5000, right? Similarly, product P2 is sold for something around 2000, between 2000 to 3000. Similarly, this product P3 is sold for 2000. That means 2000 units are sold of product P3. So this sort of comparison can be made very easily from bar charts, right? When we will be doing the problems, you will be better cleared, right? Apart from that, we have line graphs also. You can see one example of line graph. Then we have Venn diagrams also. Data can be presented in Venn diagrams also. So various types of graphs are there to present the data. Okay, we will be taking the problems based on each and every type of graph gradually, and at that time it will be like better clear to you, right? So let's begin to take the problems. Initially we will be taking very simple problems. So the concept of data interpretation should be clear to you, right? So let's begin. Friends, before we move further and start solving the problems on data interpretation, I would just like to share some of the terminologies, maybe formulae and relationships with you. So while solving the problem, you will already be knowing the basic terms, right? Now what is average speed? That is distance covered by total time taken to cover up that particular distance, right? Now what is acceleration? That is change in speed by change in time. That acceleration is nothing but change in speed, that is in a particular unit time what is the speed that is changing, or we can say speed increase, right? Now that is calculated by final velocity minus initial velocity divided by time, right? Then we have total profit or gross profit. What is the profit of a company or an organization? That is sales minus expenditure. What that is the total revenue which they are achieving, and if we deduct the total expenditure, we will be getting the profit. It's a very simple concept. Suppose a company is manufacturing garments, right? So they have to incur various costs. For example, they have to buy clothes, they have to get them stitched, packing, and apart from buying clothes, they have to buy accessories also. Suppose a company is manufacturing shirts, then they have to buy buttons also, zips also, whatever various things are there, right? So these are the various costs that which they have to incur, right? And suppose after that they are selling at certain price, so that is actually sales, that is selling price per unit into volume. Okay, so difference between cost and sales is actually profit. Now cost is not a cost of a single piece. So whatever the volume they are producing, the total cost taken together is the total cost of the manufacturing, right? So total profit or gross profit is sales minus expenditure. Similarly, total profit or gross profit that I have described over here, that is selling price minus cost price into volume, right? Now what is revenue? That is number of items sold into price. Suppose this company is which is manufacturing shirts, so they are suppose selling 10,000 shirts in a particular month, right? Now suppose the price of each shirt is, that is selling price, it's actually selling price. Selling price of each shirt is maybe 100 rupees. Then what is the revenue, or we can say sales, that is 10,000 into 100. So it's right. So it's 10 lakh rupees. So that is the sales, or we can say revenue, right? Then there is operating profit, that is sales minus operating cost. Then profit before tax and profit after tax. So suppose if a company is into manufacturing of shirts, then whatever the profit they are earning out of selling of these shirts, they have to pay certain taxes, that is income tax, maybe excise duty, and various other tax, maybe sales tax, something like that, right? So there are two types of profits, that is profit before tax and profit after tax, right? So they have to pay the taxes. So after paying the taxes, the term becomes profit after tax, right? Now what is profit before tax? That is operating profit minus interest minus depreciation. Now what is interest and what is depreciation? That we have already discussed in our interest simple and compound interest sessions. Just we'll go for a quick recap over here. Suppose to manufacture a particular maybe commodity, maybe here if we talk about shirts, the company is incurring certain expenditures. Maybe they are borrowing the amount from loans, from banks, right? So if they are borrowing the amount from bank, then definitely they have to pay the interest, right? So whatever the profit they are making out of that, this profit is what, like it is only a difference of selling price minus cost, selling price and cost price. Just listen to me very carefully. Now here the cost price does not include the interest cost. Here the cost price is just including the operating cost, that is stitching cost, this packing cost, maybe this raw material cost and all that, right? But it is not including interest cost. Okay, so total operating profit, if we deduct interest and depreciation, is what? Depreciation is the value of the machinery is decreased every year. Suppose you bought a machinery for 1 lakh rupees, right? In maybe in year 2000. Now every year the value of this machine gets depreciated. Why it is depreciated? Because sometimes the technology is like getting older. Apart from that, the life of the machine, because it is depends upon its usage, the life of machine is getting down. So gradually the machine loses its value. So that is actually depreciation. Okay, so profit before tax is operating profit minus interest minus depreciation. Okay, so if we put operating profit instead of operating profit, if I put sales minus operating cost, then we get this formula. Now what is net profit? That is revenue minus expenses. That is the net profit. That means all the expenses taken together. That is the profit. Like if you deduct all the expenses, that means the expenses of even interest, depreciation, manufacturing expense, and every expenses if you deduct, then you will be getting the net profit, right? Now, what tax is? That is profit before tax minus net profit, right? That we have already discussed. What is turnover? That is price into volume. What price is? Here price is selling price per unit, right? Suppose the company is manufacturing shirts, or maybe they are selling the shirts. Maybe the price of each shirt is rupees 100, that is selling price. And the volume is, I suppose it is 10,000 shirts, right? So what will be the turnover of the company? That is 10,000 into 100, that is 10 lakh rupees, right? So that will be the turnover, or we can say revenue of the company, right? Next is return on sales. Like what is the turnover, and from that turnover what is the gross profit that you are making? That is return on sales, right? Gross profit margin, profit before tax over sales. Like we will be taking examples. Suppose the turnover of the company is 10 lakh, and out of that the profit is maybe 2 lakh. Then there is return is what? It is 20%, right? Then we have net profit margin, that is profit after tax by sales. Asset turnover ratio, that is revenue by assets. Assets means the assets of the company, may be tangible or intangible assets, right? Deficiency is requirement minus availability, that is deficit is further demand minus supply, deficit is import minus export, right? Similarly, balance of trade or trade gap is exports minus imports, and trade surplus if trade gap is positive, and trade deficit if trade gap is negative. So these are the basic terms that you should keep in your mind, right? Just pause the session if you are not able to follow me very fast. Just pause the session and read all the definitions in well manner, right? Now next is budget deficit, that is income minus expenditure. Imports is equal to consumption minus production, right? Suppose our country is able to produce maybe 100 kilogram of wheat, and our consumption is maybe 120, then we have to definitely go for imports, right? And import is actually what? Then consumption minus production. Suppose consumption is 120, production is 100, that means 20 part we have to import, right? Now what government expenditure is? Borrowings plus government revenue. Whatever the revenue that government is earning, plus whatever the deficit amount that they have to borrow to meet out the expenditure is called government expenditure, right? So government expenditure is the amount which government earning as revenue and the amount which they are borrowing, right? Revenue expenditure plus capital expenditure is equal to government expenditure, right? And earning per share is profit over number of shares, right? Next is return on investment, that is total profit by total investment, that is return on investments, right? Suppose to earn a profit of 20,000 rupees, if you have incurred 1 lakh or you have spent 1 lakh as an investment, that is, then your return of investment is 20%, right? Dividend per share, that is income per share, you can say, that is total number of dividend by number of shares. For a company, suppose you are having 100 shares, and if you are earning the total amount of dividend as 22,000, then what is your income per share? That is 20 rupees. That is dividend per share. Now equity plus reserves is equal to number of shares outstanding into book value. Price range is highest price minus lowest price. What is price range? In generally we say that the price varies from 10 rupees to 15 rupees. That means the price range is that is 15 minus 10, or we can say 5 rupees. Okay, the variation is of 5 rupees. Next is inventory is production minus sales. So generally what happens, whatever amount of whatever the production is being done in a company, everything is not sold out, right? So production minus sales is called as inventory. Suppose the company has manufactured 1000 shirts, but they have sold only maybe 800 shirts, then their inventory is actually 200. That means they are still having 200 shirts with them, right? Now capacity utilization is installed capacity, and what is the like production over installed capacity is capacity utilization, right? Marginal cost is rate of the change in the total cost for unit change in quantity produced. We will be discussing these terms when we will be solving the problems, so don't try to mug up the things. You just try to understand the terminologies. So when we will be discussing the problem, the terminologies do not look new to you, right? Then total cost is equal to fixed cost plus variable cost. Crop yield is production of crop and over area under cultivation. Then plant load factor. Per capita income is total income by population. Suppose the population of India is 1 Arab, and the total income in per in a particular year is maybe 100 Arabs. That means per capita income is rupees 100, right? The questions are asked on even cricket. So batting average is number of innings played and the number of runs scored. That is number of runs scored out of number of innings played, right? Average per inning, the formula is there, right? So all of these are the basic terms or terminologies, or we can say relationships, which we will be using while solving the problems. Generally in examination, while asking the questions on data interpretations, the relationships or the formula is given, okay? But you should be aware of the basic terminologies, right? Now here we see some commonly used abbreviations that also we just discussed. That CPI, that is Consumer Price Index, GDP, Gross Domestic Product, Gross National Product, PBT, Profit Before Tax, PAT, Profit After Tax, EPS, that is earning per share, DMA, daily moving average, MHI, monthly household income, NP, net profit, GPM, gross profit margin, NPM, net profit margin, CAGR, very commonly used term, that is cumulative average growth rate, ROI, return on investment. So all these are the basic terminologies, basic relationships that we have to keep in our mind when we solve the problems based on data interpretation. Friends, in this session, I think there is so much we have discussed. From next session onwards, we'll start solving the problems. So do revise this session once again before approaching to the next session. Bye-bye.